Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, August the 8th. And I've got the S&P on the screen here. I always like to start with the S&P because that's kind of the barometer of the market, as we know. So we'll start in on a smaller time frame, work our way out, see what's going on, and see what we can expect. So this is a one-day chart. This is today, and we had a this looks pretty volatile. It's not that volatile. We had a fairly tight range. There's 28.54 to less than 28.64, so that's less than a 10-point range. Um, top to bottom here, and we just chopped. I thought for a while we were going to break out and go here, higher, and here I didn't know, but I thought, yeah, we could go this way. But let me show you why that's important. So if we go out here on a 5-day chart, you can notice that this is pretty interesting. So as we get up here, we hit basically a ceiling in the market, and we keep hitting our head on it and just not getting through it. And it's actually at a strange level because it's not a Fibonacci level, it's not a voodoo line, it's not at the all-time high. It's past, I thought 28.50 would actually be that level, and we just went right through that. So again, there's it's not good or bad, but we are up against a level here, and it will obviously coin toss from here whether we go through this or not. But again, let me show you how to put this in perspective. So this, see down here on the bottom, that's last Thursday. We were at 27.96, so roughly say 2800 here. And here we're at 28.63, so that's 1 day, 2 day, 3 day, on the fourth, 4 days to go 63 points, and then we've kind of held. It's just we've just been chopping here. That's a pretty substantial run in a very short period of time. I had been thinking that we were going to pull back, and let me show you why. So let me back this out even further, and you can see that we had, if you were watching this, this is the 28.50 level, and we came up to it here. We had a big short covering rally that day when Trump met with the EU to discuss tariff negotiations and things, and completely straight up vertical right into 28.50, and then it failed, and then it failed pretty hard here, and again, and we ended up down here a couple days later, at 27.96, and then if we look at this from this standpoint, it's this is one Thursday, this is the next Thursday, and this will be tomorrow. So it's a pretty short period of time to have a pretty wild swing. And again, let's take this out one step further, because you always have to put this in perspective. And look, so right here, that is the all-time high for the S&P, and we are right there. We are right up against it. We were about 10 points away from it. Which is nothing for the S&P to move, to reach up there and tag it, and I think that might be what happens. But again, if you look back historically at some of these other levels, of course here's 2800, and there's 2750, and we've done the same thing here. We kind of touched the level, failed, touched the level, failed, and then we touched it here, broke through, but then we broke through it again. And here 2800, 2800, 2800, 2800. So I'm thinking that one or two things, there's a couple of scenarios, obviously. We just keep on ripping. We go right through this the all-time high here. We just rip through it, and we just keep going. That's going to take a big catalyst, like the Fed saying they're not going to do anything. They're going to back off their timeline. China saying we're going to agree to some of the tariff language, or something happening. Now what we can put behind us is earnings, because we're winding up this earnings quarter, so all the big names have basically reported. So I don't know what that catalyst would be to the upside. Now a more likely scenario is that we just kind of bounce off this and maybe take a couple of times to to get through it, kind of like we did here and that could take days, it could weeks or months, whatever. And then the other scenario is that we pull back here, which I think is the most likely scenario, is we pull back here maybe to the 2800 level before regaining some momentum and then heading back up this way. So a couple of scenarios and different ways to play it. Obviously, the higher we go, the more careful we need to be. The Nasdaq, I can show you the Nasdaq. It looks just the same. Well, let me pull it up. I will show you the Nasdaq. It looks the same. Remember the Nasdaq. So here's all-time high on the Nasdaq, and we're again stone's throw away from that, right? And the Nasdaq is being driven by. I mean, it's almost scary, We know Apple's $1 trillion now, and Amazon, so forth. But we've got a lot of other stocks that aren't doing so well on the Nasdaq. So we're getting, I think, a thinner and thinner, leaders of the pack that are pushing this thing, which makes it more vulnerable to the downside. So, I'm not at the moment. Everything still looks great, and you just want to be long and all that kind of stuff. But I'm, seeing little signs that make me more and more cautious the higher we go for some kind of consolidation, whether that is short term, couple of days, couple of weeks, whatever. And we have to keep an eye on the backdrop of the economy, what's going on, and so forth. And just to keep an eye on which way to go. Obviously, with a market like this, we want to stay with the leaders, the ones that are moving higher. The Amazons of the world and so forth. Apple, CRM, Salesforce. Next week we've got Home Depot. I expect good numbers from them. Things like that should continue to do well. But I'm also actually kind of switching gears and looking at some of the, the more value-oriented plays in the event that we get some kind of sector rotation and so forth. So just be aware of that and be careful. I just wanted to kind of highlight the indexes here and where I think the general or the overall market is going or could go. A couple of different scenarios. Again, the trend is still, at this point, the trend is still higher here. I mean, we have no reason to think that this doesn't go higher. However, remember, we can do this all the way up. So be careful, be a little more guarded as we go higher, maybe a little hedging, maybe take some profit off the table where you have some profit, and just kind of position for that. And also, if you're kind of thinking along the same things I'm thinking, you can actually make really good money on the downside. If we do, it's not terrible, it's not the worst thing in the world if we pull back, if you've got some positions down below, for example, butterflies or calendars or something down below that might take advantage of that. So again, just be aware of that and be careful and kind of tighten up stops on the downside because I think whether it's sooner or later, it's some form of a pullback is coming. I'm not even going to call it, no way I'm going to call it a correction, but I'm just going to say a pullback. It could be as shallow as this, or deeper. It could, we could have one of these kind of deals, or we could have one of these kind of deals. I don't really think it's going to be one of those kind of deals, or this, but anyway, that just gives you some ideas around, kind of what I'm thinking and where we might go. So I hope this is helpful, and thanks for the time, and I'll see you guys at the next update.